Hello traders, this is Blake Morrow and you're listening to the daily Roundup webinar. I hope everybody's having a great trading session. It's been obviously a very busy day in the markets. First of all, we're at a pretty important support as far as the S&P goes. So let's talk about this really quick, and I want to talk about where we're at. I want you to take a bit of a longer term view of the S&P. So one of the things that I've found that can always help me identify where we're going to go is kind of where we've been and how long it took us to get there. So when I look at the stock market right now and I think about the correction we're currently in, do I think that we can stall or bounce here? Yes. The answer to that question is yes, because it is at a 38% retracement. And we've come pretty far in a very short period of time. So the market, especially at current levels, could quite possibly bounce. All right. Now the bounces have been pretty shallow. So that's a risk for the S&P. However, the one thing I need to point out is we've gone really far over a pretty extended period of time and at a fairly rapid rate, especially since like the middle of 2018. We have rallied sharply. So to give back these gains this quick isn't too surprising. So when I look at like the longer term view of the S&P, I might think, okay, yeah, we do have some support here, but let's take a little bit longer term view and realize that we haven't even reached a 24% retracement in the equity markets. There's an old adage: up on an escalator takes us a long time to get up there, down on an elevator, and we can come down pretty quickly. And that's what's happening currently. We're currently in that elevator shaft on our way down as we speak. Now, like I said, we are at a 38% retracement of the last leg higher, the last major leg higher from the end of 2019. So we're testing the 38% retracement. My 2 cents are we're going to see this trend line before we get any meaningful bounce. But that doesn't mean that today can't be a period of consolidation and a little bit of choppiness. One of the things that is leading me to believe that we might continue to drop by the end of the day is, well, a couple things actually. First of all, the dollar yen. And second of all, take a look at bonds. But I'll look at bonds here in a second. The dollar yen has broken through the 110.30 level, which was, I thought we were going to get some sort of bounce from there. As I alluded to in a tweet, one of the toughest things about the market has been, all right, what do I trade when the S&P is breaking down the way it is? My trade has been long euros, which I've done pretty well with, in and out actually multiple times over the last few days. But also I started shorting the dollar yen over the last couple of days because it was moving with risk. The thing about the dollar yen is we broke really key. This is the key breakout point. You can see right here. You see that, right? And I thought we were going to bounce there. So I covered up my shorts earlier today as we were closing in on that support. And then when we broke through it, I'm like, holy cow, this is going to start a whole new leg lower in the S&P. And it has. Now the S&P is stalling and the dollar yen is stalling as well. Now notice where it's stalling. Let me put up a weekly chart really quick. I think this is going to be better for us. Oh no, the day is fine. All right, see that blue line? This one? Not the dotted one. Let me get rid of the dotted one. The blue line. We're basically back testing the broken trend line. So it doesn't surprise me that we're getting some support here. So what I think is going to be critical by the end of the day is if the S&P breaks down, the dollar yen is probably going to break down as well. I kind of don't think it's going to happen yet. And for that reason, I'm not short the dollar yen at this moment. I've been in and out short. If you guys are in the chat room, you guys already know that. I've been in and out short a couple of different times today. And what I'm not also seeing is I'm not seeing a real strong rally in like the anti-commodity currencies. So we're not seeing the Aussie sell off, the peso sell off. The Canadians, still relatively weak, but it's still, hasn't breached big resistance at 133.20. So I'm not 100% sold that we're going to break down today. Knowing that the S&P is at the 38% retracement, knowing the dollar yen is testing this trend line, this is probably, if we're going to bounce, it's going to be somewhere around here. And is it going to be sustainable? I don't know. But anyway, but that's I'd be watching. The dollar yen should not, if I'm right in this assessment, what is that? Let me get rid of that. If I'm right in this assessment in the dollar yen, we shouldn't break lows from here today. We shouldn't. We should bounce from here. All right. Now, the euro. As I said earlier this morning, if you were listening to the face webinar, we're building a nice base. I had some longs down here at the 30s, sold them in the 50s. I missed a lot of this move on my trade, but that's okay. You can't capture every pip, and I'm one of those people, especially those of you that know me. I don't beat myself up if I miss a trade or if I miss a few pips. It's it's all about trying to just capture some of the move or a majority of the move if you can get it. But I'm not here to call the top and call the bottom. All right. So the euro, as far as I'm concerned, is building a base, maybe even a little inverted head and shoulder pattern here. As you guys know, I believe 108.80 is massive resistance. I've talked about it a lot. That's the breakdown point here. And that's the one thing that you got to be a little careful about if you're short euros. If we break these highs, it's going to squeeze. One last question I got from Dimitri asked about gold. Look, I think gold's very bullish. I think it's very overbought. And the sentiment is very strong. So what I drew out for you earlier today is probably more or less what I think is going to happen. We're going to see a consolidation, something that looks like this, and then, kind of consolidate and then, resume that uptrend at some point here soon, probably in the next week or two. If I was long, I'd be very careful. As bullish as I am gold, I think we can, retest the 1600 level, 1610, 1600. If you guys are thinking about shorting it, I don't know. I wouldn't be too excited about trying to short gold. It's been really strong. I'd be more in the camp of trying to buy a dip rather than trying to sell this rally, because you never know. Coronavirus news comes out, and it's hit. We triple our cases in the United States overnight, and gold's going to be trading at 1700 before you know it. So, I think buying dips is the way to go at this point. And that's, again, just an opinion based on what I say here. All right, guys. Well, hey, remember, if you are a Forex or if you're a ForexAnalytix subscriber, thank you very much. If you support what we do, thank you very much. Thanks for just listening in. I appreciate that. And if you haven't tried us out, make sure you do so. It's only $1 for 10 days. Jump in the chat rooms, get in the get the mobile app. It doesn't matter what price you're at, whether you're using the premium product or the light product, you still get to test the premium product while you're testing it. So download the mobile app while you're at it. All right. Thanks for listening in. My name is Blake Morrow. I'll see you tomorrow morning on the Face webinar. Have a great one.